So in this price action pattern lesson, we will be focusing on flag patterns. Flag patterns are pretty simple, they're pretty straightforward, but they're also the patterns that I use the least. The other ones, such as ascending triangles, descending triangles, wedges, head and shoulder patterns, double bottoms, double tops, those are mainly the price action patterns that we will be using over and over and over and over again. Flags are mainly continuation patterns, so they happen a lot of times well into trends and already well into moving runs and so on, whereas I prefer to focus on entering positions kind of like right at the beginning of trend changes, right at the beginning of where the runs begin, whereas flags, since they're continuation patterns, flag patterns typically happen a little bit later into trends, a little bit later into runs. But with that said, let me explain it all to you. So I'll show you a couple of examples and I'll also draw it out for you. So let's have a look. So the one thing to know with flags is that mainly there's two parallel lines that create a flag, right? And when you look at this example here, this is what I mean. So we have this pullback. It typically happens on a pullback pattern. So whenever we are trending upwards and we get kind of a deeper pullback, or it can even be a smaller pullback, but let's draw it out. A flag means it looks literally like a flag. So we have one line, and then we have pretty much an exact duplicate, a parallel line that connects the lows, like in this case, right? And this now has developed a flag pattern. Now you can adjust it obviously a little bit, it doesn't always have to be perfect, but this is what I would consider a flag pattern. So we're trending upwards and then we have this deeper pullback, develops a flag. But again, a flag pattern, the main idea is that you wait for the breakout. Once it breaks out, at that point the flag is confirmed, because check it out, prior to this we had a head and shoulder pattern, left shoulder, head, neckline, right shoulder, breakdown, right? Eventually it developed this flag once it finally broke out. But let me draw it out first for you and then we'll come back to the example. So since flags are mainly continuation patterns, we're mainly going to be focusing on that. So check it out. There's a few different ways that a flag can play out. And one of those ways is flat, like a typical horizontal line. Okay, so imagine we have a typical horizontal, maybe a resistance level, maybe another resistance level or support level below. A flag would simply look like this, whereas a triangle pattern, the lines are obviously slanted. With a flag, they're parallel to each other. And eventually, it typically would break out to the upside as a continuation play. Right, so that's one example of a flag. Obviously, let's draw out the same thing from the bottom point of view. So that's a bullish flag. In this case, this is now a bearish flag that we're drawing out. And again, it's the same idea, right? So it starts trending, but it's not forming lower lows, and it's not also forming higher lows at this point. This is just a horizontal flag, and it can continue trending sideways, moving sideways for quite some time until it finally breaks down, right? And again, a flag can happen on any time frame, monthly chart, a weekly chart, a daily chart, 4-hour chart, a 1-hour chart, it doesn't really matter. But the idea with a flag is that it typically happens well into the trend or already well into the run on whatever time frame it is that you're looking at. So in this case, in this example, imagine that this has already been trending for quite some time. You know, we can even draw it out that this has already been higher. We're already getting higher highs, higher low, right? Initial pullback, and then potentially a flag develops, and then we continue higher, right? So that's the idea. So that's a horizontal bullish flag. This is a horizontal bearish flag, but obviously there's another variation of them. So let's again imagine we have a bullish trend to the upside. So this is a bullish trend. And then a flag pattern can also develop this way, where we get a slant, a slanted line. And it looks something like that, right? So now we will be kind of trending downwards, making lower lows, lower highs, lower lows, lower highs, or a breakout, right? And when we break out, eventually higher low, and we continue with the bullish trend. Right, so this is kind of like a falling flag. You can call it that. Now the same example, obviously from the opposite direction, is we're in a bearish trend, and the same idea applies. We have this pullback that develops in price, and eventually it develops this kind of flag pattern. So same concept, higher or lower high in this case, higher low, higher high, higher low, higher high, and maybe at this point a breakdown, and we continue further down. So this is again a continuation pattern. So see, every single one of these is a continuation pattern, whether it's this bullish kind of horizontal flag to the upside or this bearish horizontal flag to the downside. In this case, we have this bullish trend, a falling flag, breakout to the upside, and same thing here, a bearish flag or a bearish trend, but a bullish kind of rising flag, kind of like a rising wedge when we looked at the triangle patterns, and then a break to the downside. So they're pretty straightforward. So let's come back to the charts, to the examples. But when it comes to explaining flag patterns, this is kind of it. You know, this is literally it. The only thing to note is that they happen again late into trends, late into runs, not at the beginning. Whereas a triangle pattern can be a reversal pattern. Same thing with a head and shoulder pattern. It can be a reversal pattern, a double bottom, a reversal pattern. Right? Flags are typically continuation patterns. So whenever we're looking at continuation patterns, that means we're already trending, right? And this is just a deeper pullback or some consolidation sideways and then a breakout to the upside. So when we come back to the example, this is again an example of this falling kind of flag. And then we get a breakout, higher low, and then we continue with the bullish trend, right? So that's how simple it is. A lot of times flag can also show up within a consolidating market. Let's see if there's anything that we can find. I mean, when price action is just kind of moving sideways, this can even be considered a little bit of a flag right here. This isn't as clear though. Yeah, this is not the best example of a flag, but I think you know what I'm talking about. So sometimes it can be like literally consolidating sideways until it breaks out to the upside. And there's really nothing else here on this chart. I mean, this right here, so when you focus on this bearish run, any of these little pullbacks, right? So any of these tiny little pullbacks on a lower time frame, right? You're gonna understand this more when we look into multi-time frame analysis, which that is coming up next. But every single one of these little pullbacks, literally, these small pullbacks within a run or a trend, is a lot of times could be a flag on a lower time frame. Same idea with this one, right? As long as they're kind of parallel lines to each other, it can always be a flag. So this is also a flag break to the downside. This is a flag break down to the downside, and so on. Now these continuation patterns, again, I typically don't focus on them that much. There's a few specific strategies where I do focus on continuation plays. But when it comes to flags like that, again, typically I like to focus at the beginning of trend changes because that is where a lot of the best reward risk ratio happens and so on, and a lot of the best opportunities in my point of view. So let me show you another last example of a flag, and that is right here. So if you check it out, again, same small little pullback. This is typically how flags develop, is on these small little pullbacks. Sometimes it's again the deeper pullback that we have seen there, but again, this is a small flag pullback. So whenever we're trending upwards, a lot of times these flags develop. Now, on a lower time frame, such as a 4-hour chart, this is a daily time frame. On a 4-hour chart, this would be a little bit more developed. It would probably look like this flag, as an example, this larger one. So it's all kind of perspective depending on what time frame you're looking at. But flags, again, continuation plays, just as I showed you, just how I drew it out on a chart. That's typically how these flags look like. So that's kind of it when it comes to flag patterns. They're pretty straightforward. Again, to me, they're rare. They happen all the time, but it's rare that I actually trade flag patterns because I like to focus at the beginning of trend changes and at the beginning of runs. And whenever flags typically develop, they typically develop well into trends and well into runs. And because of that, again, I don't focus that much on them simply because of that reason. But it really depends on the strategies that you built and so on. So for some of you guys, you might like flags, and this is literally what they are. So that's it for now. Again, that's it for price action patterns. My favorite price action patterns are, again, triangles, head and shoulder patterns, double tops, double bottoms, all of those. that we covered before, because all of those are reversal patterns and continuation patterns at the same time, whereas the flag typically just a continuation play. So that's it for now. Hope you enjoyed this lesson and hope you enjoyed price action patterns. I'll see you in the next one.